Hello children, let us continue our discussion on fund-based accounting. As you know, in fund-based accounting, a fund is created for a specific purpose. Now that fund may be in the form of unrestricted fund or maybe restricted fund like building fund, sports fund, prize fund, or tournament fund. So whenever a fund-based accounting system is applied by a non-profit organization, a fund account in the name of the category for which the fund is received is opened, and all the treatment of the amount which is added to the fund or which has been spent out from the fund will be made in that account. So a fund account is created in this kind of accounting. It's not that always we need to drop the fund account and find out the amount that we desire to find out. It may be done by direct treatment of the amount which is added to the fund or which has been spent out from the fund by doing certain working notes. So when you are creating the fund account, say a building fund, suppose there are certain more donations received towards the building fund, and then that donation will be added to the building fund, and if there is certain expenses met for building expenses or for upkeep of building, then this amount will be deducted from the building fund, and as a result of this a figure will be found. So if this figure is a credit balance from the fund account, if it's a credit balance in the fund account, it has to be shown in the liability side of the balance sheet. That means we have enough money in the fund, like in this example building fund, which is enough to meet the expenses towards building. But in certain cases, after you see the expenses that have been met out of that fund, sometimes the expenses exceeds the amount which is available in the fund. So in that case, the fund account will show a debit balance. So in case the balance in the fund account is debit, now this time the amount of the fund account which is a debit balance, it may not be shown in the balance sheet. You cannot show it in the balance sheet. In such a case, that amount is to be debited to the income and expenditure account. So this is a very special case. In case our balance in the fund account is coming as a debit balance, it has to be debited to income and expenditure account, not in the balance sheet. But in most cases, the fund account shows a credit balance which is taken in the liability side of the balance sheet. So let us see some examples and try to understand the accounting treatment of these items in a better way. So we'll take this illustration here, illustration 7. So you're asked, I will take number 1 and 3. Number 1, we have to find out how these items here will be given the accounting treatment for a non-profit organization. The first one here mentioned, tournament fund rupees 2 lakhs, tournament expenses 60,000, receipts from tournament rupees 80,000. So there is a fund in the name tournament fund of amount 2 lakh, means there is this much money in the fund created for tournaments. So it is a specific fund, or you can say it's a restricted fund. It will this money will be only used for the tournament purposes. Now the non-profit organization may had various tournaments. So in those tournaments they have made a total expenses of rupees 60,000, maybe refreshments or arrangements or various expenses towards tournaments. At the same time, they may have sold some tickets, or they may had some contests during the tournament, and through those contests there were some income generated in the form of receipts, that is of amount 80,000. So how we are going to show this in the accounting treatment? If we observe the amount of fund 2 lakh and the expenses 60,000, so our expenses is quite less than the fund amount. That means the fund amount was enough to meet the expenses, isn't it? So this time, since the expenses is enough, means the fund amount is enough to meet the expenses, this treatment will be in the balance sheet. Okay, always look for this first. If the expenses amount exceeds the fund amount, then we may not show it in the balance sheet. Okay, it will go in the income and expenditure account, but here that is not the case. The expenses are much less than the value of the amount in the fund. So we'll show this treatment in the balance sheet, in the liability side of balance sheet. Okay, so here you will take the tournament fund in the liability side of balance sheet. Tournament fund in the inner column, take the amount of tournament fund 2 lakh. To this we made some tournament expenses, so less tournament expenses of amount 60,000, but we are not yet done with the amount. This is 1,40,000, and there had been some receipts for tournament, isn't it? So receipts from tournament will be added, since it's going to bring in some money which will be deposited in the tournament fund account. So on adding it, the amount comes to 2,20,000. So this amount will be shown in the balance sheet for this case, where a specific fund, that is the tournament fund, was created, and it had certain expenses and some receipts from tournament. Taking the next example from the same illustration, number 3, given prize fund rupees 1 lakh. There is interest on prize fund investments 10,000, prizes paid rupees 20,000, prize fund investments 80,000. Now if you will notice here, we have prize fund, which is a specific fund meant for expense, means it will be used only for purchasing the prizes to be distributed for any events or for any tournaments, you may say. But if you will see the other items here, there is interest on prize fund investment. Now what is this prize fund investment? Prize fund investment must have been some investment which have been made out by the non-profit organization in the form of some investment. They may have invested the money which is received in the prize fund outside in the market. Okay, so that is your prize fund investments. Okay, so when an amount from a specific fund is invested outside, so that investment which is like purchased or bought will become an asset for the non-profit organization. So in this case, the prize fund is a liability, whereas the prize fund investments is an asset. Okay. Now there are now this is a form of, we can say, endowment fund. Okay, it's an endowment fund because here the donor must have put a condition that the amount of fund which is given as prize fund will be invested outside. So that investment made outside is prize fund investment. Now on this prize fund investment, the non-profit organization is earning certain interests, and that interest is mentioned here, which is rupees 10,000. At the same time, they have made some payments, or they have made some spendings towards prizes. They have purchased some prizes, so the expenses towards prizes paid is rupees 20,000. So here, as I mentioned, this prize fund is a liability, whereas prize fund investment is an asset. Okay. So this will appear in the liability side, this will appear in the asset side. And in this case, remember, on this investment, whatever the interest has been earned will not be added to this investment again. Okay, it will be added to the prize fund, not to the investment, because the investment money should remain intact. Okay. And any interest earned on such investment will be like added to the prize fund. It will be deposited in the prize fund account, not in the investment account. So the treatment will be to the prize fund. You're going to add the interest fund, interest on prize fund investments, whereas the prizes paid will be deducted, as this will be money spent from the prize fund. Okay. So to show this in the balance sheet, you will take prize fund, add interest on prize fund investments 10,000, less prizes paid 20,000. So that will come to how much? 1,10,000, and deducting 20,000 it will lead to 90,000. So prize fund final amount will be 90,000 in the liability side of the balance sheet, and this prize fund investment you have to simply note down in the asset side. Okay, as prize fund investment, the value 80,000. Okay. Now this is the treatment of the example before you. Thank you.